Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So new all-time highs. Bulls have kept their complete control. Anything above 320.36 actually will default to the lower level right next to it. 320.15. Anything above that is a daily high or low, keeping the bulls in full control. So all we're doing is creating more space to keep the daily uptrend going strong. IWM. So still hasn't broken this little short-term resistance, but again, you look at the weekly time frame and it's certainly setting up for very healthy consolidation. What we will need to see, in my opinion, before we break 167.12 is another little higher low holding 163.54, the current bottom, and then see that new higher high. So potentially something along these lines. But we need that higher low, in my opinion, in order to change this daily trend, because right now we're in a daily downtrend. Lower high, lower low, still a lower high. Need that higher low, higher high for the weekly bull flag to be possible. QQQ, lead bull sector, continues to go strong with the S&P 500. 212.24 is our last daily high or low. And again, I use Apple as an individual stock for a sector, or for a gauge of the sector. And as long as it keeps running to all-time highs, especially with Google right behind it, we know the bulls are in full control. So not going to fight that. Again, it's two different scenarios. You can be completely fine not being comfortable buying long up here for more than short-term positions, but it's a very different standpoint than fighting this bull trend. So again, we don't want to keep trying to nail tops. We will see the volume during regular trading hours when the bears have something to prove for us, and they just have not done so. I mean, you look at this daily time frame for SPY, and you would have absolutely no idea that there was any conflict going on in the Middle East right now, because there's no notable weakness and no notable bear volume. We have not had a red day that had more than average bear volume since December 2nd. So it's been 5 weeks now. That's pretty astounding. We just went through that entire Iran debacle without one day being red and having any notable volume. XLF. So resistance 31.08 is up here approaching. If we lose the hourly uptrend tomorrow without breaking resistance, we'll be looking for a daily higher low compared to 30.46. Bulls, of course, would just prefer to get that out of the way tomorrow and break 31.08 for a new all-time high. XLV, nice bull move, breaking daily resistances. 103.24 right back up to the all-time high. And that's the only resistance level. Same thing, if we fail to break that all-time high, the odds favor an all-time high with this momentum, but if we were to fail tomorrow and break the low of today, then we watch for the tightening daily range. That's the best hope for the bears at this point, is daily equilibriums. Biotech sector, broke short-term resistance, 98.79 is the top, and again, we may need to see a daily higher low form before we make it up to that resistance level. And the VIX, 7 days in a row now with a close lower than the open. And if you go back and look at when's the last time that's happened, it's probably been a while. 6 days, there we go. Back then it happened a bunch. But bottom line is, as we know, not much going on in the volatility sector right now. 1240 and 1170, two levels to keep an eye on. And we have to lose the daily uptrend in the S&P 500 in order for any notable weakness. That daily uptrend has been intact since the start of December. Gold. So gold is still pulling back, has not formed its daily higher low yet. And what we need for a daily higher low to have formed is a change of the 4-hour trend. So we would have to see a bounce take place on this 4-hour chart, set a lower high compared to 1611, hold support, and then change the 4-hour trend if we're going to see the bulls regain momentum in their favor. There's a decent little lower wick on the daily chart. Bulls would love for that to be our higher low. But again, work will be needed on this 4-hour time frame, we would need to change this trend to be confident in that daily higher low. Also looking towards silver to see if we can get any clues. Come on, TradingView, don't quit on me now. So TradingView at least, or silver at least has a double bottom. 1778 and a break of 1802 would be enough of a little shift in momentum on the 4-hour time frame to be confident in that daily higher low. And again, worst case for the short-term bulls from here would be just a daily loss of the uptrend with a bounce, unable to break the recent high, and then a drop to a lower low. Best case on this bounce is for the bulls to create as much space as possible to try and see an equilibrium be the result, as opposed to a daily lower high and lower low. Miners. So I was looking for a gap down open on miners. They didn't get nearly extreme enough for me to be interested in a play. If I'm going to be buying into weakness, it's only because we're at extreme RSI levels and we just traded sideways today. So bulls would have to hold 30.19 and break 31.18 to change the hourly trend. Worth watching for tomorrow. If we break that support level of 30.19, there's a little gap at 29.94 to be watching. But again, these hourly RSI levels are just not close enough to me liking any entries at this point. Patiently waiting. And picky enough trying to play these miners because of how much weakness they've shown relative to gold that I'm going to be picky and not care at all if I miss this bounce. So that ensures that, number one, I either wait for an ideal setup that I'm comfortable in and I make profit on. Number two, I miss the trade and miss and lose $0. So that's my way of being conservative. Oil. So we were watching that oil 2-month long-term potential equilibrium continue to pull back today. It's the same thing as gold, and it's correlated to gold now because of this whole Middle Eastern debacle, but the 4-hour time frame has to see a clear trend change for our daily higher low to be set. Guess I need to refresh all my charts. So right now it's just a bounce, and on this bounce we'll be looking for a 4-hour lower high, seeing resistance in the low 60s. And if we're unable to break 60.29, then it's potentially looking like a head and shoulders pattern, although not a nice and clear one. It would be something like that if we reject, need the higher low, and then change the trend. But as of right now, it's just a lower high, keeping the bears in control. So not looking to mess around with oil, as it's looking like there is potential we continue down a bit more. Natural gas, still a potential daily bear flag. And anything under 229 is just a lower high. The bulls are building a base of support at 210, but that's all they're doing, playing some defense. Certainly not going on offense at this point and proving nothing to the bulls. So bottom line, same as yesterday, pretty much. Gold, oil, silver consolidating, miners consolidating, looking for some kind of trend changes on the 4-hour time frame to indicate daily higher lows are set on those commodities. Market still extremely strong. Tesla, again, just today, I traded Tesla 6-day trades today. Went 4 for 6, 2 small losses. Ended up with a couple day maker, but the volatility is on point. Double top with the high of yesterday. Let's see where we're looking here. So here's the high of yesterday. Hit there first thing. We had 488 as a little double low of support from extended hours and yesterday afternoon. I was playing it in both directions and was done by about 10:30. And I will continue to have Tesla be my backbone. It's currently my most profitable ticker in 2020. And I will continue to day trade it as long as it gives us this opportunity. Eventually that opportunity will subside, which is why we have to take advantage of it while we have it. So I hope you're well. And don't fight the bulls. Daily uptrends very clear. When we lose the daily uptrends, we can shift our perspective. If we are in daily and weekly uptrends and blue sky breakouts, we should be looking bullish unless it's just for a day trade flip. Thanks again, and we'll see you next week, Monday. So this is my current trading setup, and as traders, not only do we need emotional and psychological balance, but we need physical balance as well. So I use this monitor more, as there's more information on it during the trading day. So my head is cocked to the left more. So every month I switch my monitors to either side of the computer, because the last thing we want to be doing is strengthening one side, or I should say weakening one side of our necks and our backs. We want to be keeping things as balanced as possible. So just a suggestion for you all as well, make sure you're moving things around and trying to keep as much balance on the wear of your body as possible. That's trader tip number 642.